Welcome to today's podcast, where we'll explore the complex world of business, covering Boeing's safety struggles amidst its financial turbulence, the liquidation of China's Evergrande, Diageo's sluggish sales in a challenged European economy, the post office leadership shakeup following a scandalous saga, Tesla's sway with Elon Musk under magnifying glass alongside legal and workforce ructions, UPS's sweeping job cuts in a slowing logistic landscape, and the ongoing scrutiny of a potential Vodafone and Three UK merger. All that and more, right here with us. In the latest developments within the aviation sector, a series of updates and important announcements from Boeing have drawn significant attention. The company has confronted challenges head-on following a recent incident with Alaska Airlines, resulting in crucial information being released to investors about the impact and subsequent response. Amid increased scrutiny, Boeing has retracted its request for a safety exemption concerning the Boeing 737 MAX 7 aircraft. This decision highlights the persistent complications the company has encountered with its MAX series airplanes since the two catastrophic crashes that precipitated a global grounding of the model in March 2019. In an admission by Boeing's CEO, the difficulties the aviation behemoth is battling came to the forefront, further spotlighted by the incident involving Alaska Airlines. This acknowledgement marks a pivotal moment for Boeing as it strives to recuperate and reestablish credibility with stakeholders and consumers alike. Adding to these challenges, Boeing has conveyed a troubling message to the public: the inability to project a financial forecast for 2024. This announcement underscores the myriad issues that continue to hinder the company and suggests an extended duration of uncertainty that Boeing must weather. At this critical juncture, paramount above all is the concern that Boeing might be placing profits before safety. This alarming notion has resonated with the industry and the public, stirring deep-seated worries about the company's commitment to safety standards necessary to safeguard the lives of passengers and crew members. Boeing now stands at a crossroads where its next steps are crucial to either reinstating public confidence or exacerbating the loss of trust. As we take a brief hiatus, upon our return, we will delve deeper into the repercussions of Boeing's situation and consult with industry authorities to comprehend what these developments entail for the future of aviation. Don't go away. There's more to come on this story. We will now focus on the unfolding developments of China's Evergrande Group, a story that has held international markets in suspense. A monumental decision by a Hong Kong court has initiated the liquidation of Evergrande, a significant player in the property sector, which collapsed under a staggering $300 billion debt. This decree marks a turning point after a relentless 2-year struggle by foreign creditors pursuing the recovery of their funds. Evergrande's disbandment represents the culmination of the company's exhaustive yet fruitless efforts to restructure its substantial debt. This judicial intervention highlights the gravity of Evergrande's financial plight and raises concerns about its impact on both the Chinese capital and property markets, potentially affecting the nation's economic growth trajectory. Following the court's mandate, Evergrande and its subsidiaries have suspended trading, leading to a notable drop in the value of their securities. The immediate suspension accentuates the repercussions of the liquidation and reflects the instability of investor confidence. Once a powerhouse in China's economy, Evergrande has devolved into a symbol of excessive corporate debt. As the liquidation process commences, affected parties, ranging from local homeowners to international shareholders, prepare for the fallout from this critical juncture. This latest development marks the close of the current chapter in Evergrande's financial crisis. We will keep you updated and provide thorough insights as the situation evolves and its effects continue to resonate throughout the global financial landscape. In today's Diageo news update, we are examining the tumultuous economic conditions in Europe and how they correlate with the current challenges faced by businesses, including Diageo itself. The Eurozone has narrowly averted a recession despite Germany's economic contraction and France's persistent stagnation. Concurrently, companies in England and Wales are navigating through an increasingly difficult period, with insolvency rates reaching heights not seen in the last 30 years. Diageo, the renowned beverage company, is navigating its own difficulties amid these trying times. It failed to meet sales expectations recently, largely due to a marked decrease in demand from Latin American markets. Moreover, the company is contending with logistical hurdles that have led to delays in the shipment of spirits, compounded by disruptions in the Red Sea traffic. As we continue to track these synergistic economic and corporate challenges, stay tuned for more updates, analysis, and insights on our show, where we remain vigilant on the evolving situation. In the latest post office headlines, an ex-sub-postmistress who was wrongly accused of owing thousands to the post office is not settling for an apology. She is determined to obtain monetary compensation for the false accusations and is actively seeking a refund. The post office scandal has led to significant changes in leadership, as Henry Staunton, the former chairman, stepped down amid the ongoing Horizon IT scandal. His departure marks a notable call for new direction within the organization, echoing sentiments expressed by Business Secretary Kemi Badenoch. Badenoch's vocal demand for new, effective guidance was closely followed by Staunton's removal from his position, underscoring the need for a substantial leadership overhaul to address the crisis. Badenoch has also criticized the current business model of the post office, suggesting that sweeping changes may be imminent. Staunton's ousting, a direct result of the Horizon fiasco, indicates a readiness to confront the issues that have severely affected the institution's credibility. As the community and stakeholders anticipate the announcement of a new chairperson to guide the post office through these tumultuous times, we will continue to monitor these developments closely and report on the impact they have on the future of this long-standing institution. In the latest Tesla roundup, the company is at the forefront of several significant developments. Surprisingly, the head of Tesla's Swedish union adversary has resigned unexpectedly, catching many off guard. Financially, Tesla CEO Elon Musk is under scrutiny as the company's shares fell by 12% following a less optimistic sales growth forecast, leading to Wall Street's disappointment with Tesla's fourth-quarter earnings lackluster guidance. Legal matters add to the company's challenges as an appeals court re-examines the legality of Musk's alleged threat to withdraw stock options for Tesla workers considering unionization, highlighting ongoing labor relation concerns within Tesla. Adding to Musk's woes, a Delaware judge has blocked his massive $56 billion pay package in response to a shareholder lawsuit criticizing it as excessive. The decision has negatively impacted Tesla shares and may affect Musk's ranking among the world's wealthiest individuals, potentially falling behind Jeff Bezos. Tesla has also faced controversy over its approach to diversity, as it has removed references to minority workers and support for employee resource groups from its language following critiques from Musk. In broader industry news, BYD's shares plummeted nearly 5% due to a lower-than-expected profit estimate, despite their high sales. As Tesla's myriad issues accumulate, investors are increasingly concerned about the company's direction and future. Musk's unconventional hiring preferences favoring individuals who have never been laid off reflect his innovative and sometimes controversial business philosophy. Public and expert sentiments have echoed these concerns, with a recent Fortune survey naming Musk the most overrated CEO. Tesla's board of directors is now tasked with determining the next steps after Musk's significant pay package was invalidated. In a decisive move that could signal a strategic pivot for Tesla, Musk has announced that a shareholder vote will be held to consider relocating the company's incorporation to Texas, a potential response to the fallout from the judge's decision to block his pay deal. Keep your eyes on this channel for the latest updates and in-depth analysis on all Tesla-related news. In the latest developments from the logistics sector, UPS, the global shipping powerhouse, has unveiled plans to reduce its workforce by 12,000 positions in an effort to streamline operations and reduce expenses. This move comes amidst a noticeable decline in package volumes, which the company links to the sluggish economy and ongoing labor disputes that have caused disruptions across the industry. These factors have also led to poor revenue performance, compelling UPS to reevaluate its labor requirements in response to the changing market demands. The workforce reduction signifies a substantial contraction for UPS, and highlights the wider challenges it is grappling with as shipment volumes decrease. This news has resonated with investors, as evidenced by a downturn in UPS stock prior to market opening, reflecting the uncertainty sparked by this announcement. The job cuts mark a considerable downsize for the company, concluding a year marked by disappointment. As the situation evolves, questions arise about the implications for the workforce in the shipping and logistics sector and about how these cuts will impact UPS's service capabilities and business strategy in the long run. We will continue to follow this story and provide further updates and analysis as it unfolds. In our latest segment on the telecom industry, we're closely monitoring the UK, where significant developments are taking place. The government has put trade talks with Canada on hold, and within the nation, a potential merger between Vodafone and Three UK is drawing the attention of the UK's competition regulator. The regulator has initiated an investigation into the merger to ensure that it doesn't negatively impact market competition or consumer choices. Simultaneously, Vodafone remains in the spotlight for their recent decision to reject a revised merger proposal from the Iliad Group, which sought to combine their Italian business entities. This move could have potentially transformed the Italian telecom landscape. We'll keep track of these unfolding events and their potential implications for the industry and consumers. For all the latest updates, make sure to stay tuned to our trusted podcast channel. Thanks for tuning in, folks, and remember to catch our next weekly business episode for more insightful conversations and expert advice. Until then, keep thriving and take care.